We are live. What's going on, guys? Good evening. Back at it again. What's going to happen in this market? We're going to have a look at all of it, guys. We're going to look at Bitcoin. We're going to have a look at the altcoins. We're going to have a look around the space. All right. So how's everybody doing? Let's give everybody a few minutes to pour on in. See what's happening out there. And let's have a look here. Bitcoin expecting the breakdown here. We got as high and closed around close to 68, but just a hair below. But still not enough momentum to work our way up to 70,621. Now, can we work our way up to 621? Well, of course we can, right? Of course we can. We do have a bit of a double bottom here. Boom, boom. We could push back up to that 70,621 level. Can we break above it? That's the question, right? As you can see, rejected here for 3 days, rejected here for 5 days. We just can't seem to get enough volume and enough momentum to move to the upside there. So we'll see what happens, guys. We'll see what happens. But let's get into the chat. See what's going on out there. You know me. Thanks for the one-on-one call today, Rob. Hey, absolutely, man. No problem. You know me says hit the like and subscribe on your way in, folks. Yes, it's free to do, and it helps the channel grow. Ken, what's up, buddy? Good evening, Rob and crew. I guess when I misspoke earlier today about live as open mic night, it turned out to be correct. Hey, you're absolutely right. Blessings, my friend. Blessings back at you. Smash the like button. Yes, absolutely. Fridge, what's up, buddy? What's up, nerds? What's up, man? Good to see you, Dave. Dave's in the house. Isaac, my dude. What's up, playa? What's happening? Volks, what's up, buddy? Good to see you, man. Ohowski in the house. Silver is trying to work its way up, like you were saying. Yes, absolutely. Gold as well, my friend. Mirdad, what's up, buddy? Why did the tariff news give us a sort of green day? Well, I guess people are kind of looking at it like, I don't know. I mean, it's kind of the opposite of what happened when he first called for the tariffs, right? The markets crashed, and then with the markets, well, listen, there was a lot of positive that came out of it, because you had a lot of companies and stuff like that that cater to retail that announced today that prices were going down on their products to retail buyers, because they didn't have to increase prices to counter the tariffs any longer, right? So for that aspect of it, yeah, you know, people like that kind of thing, right? It equals more money in people's pockets at the end of the day, right? Ben, what's up, man? Is it you live? You know it, brother. Patience will pay off. Amen to that. Can I get an amen to that? 100%, 150%. Let's go. Jamie, what's up, man? Good to see you. Good to see you. Those big, bold capital letters. You love it. You love to see it. We're caught up in the chat. Let's dive into the news. Like I said, the breakdown eventually could take a few weeks to play out, but the breakdown for me, somewhere between 48 to 50K is inevitable, I think. Our next breakdown level probably around 58, and then consolidate before another leg down. That could take weeks, though, guys. That could take weeks. Attila, supporting the channel. Thanks, buddy. Let's go down. I got some dry powder to plan out for the next year. Let's do it. I agree, man. Let's go. Let's buy that bottom, and let's ride it on up to the top, baby. Beast mode. Just curious where you hope to scoop some uni. Thanks. Uniswap, listen, I think that we could see... I mean, listen, if we could get around $3, anything below $3, fantastic for Uniswap, in my opinion. Super fantastic. Hey, yo, Aaron says, smash the like button and smash Conor McGregor. Nice. There you go. Hugo, what's happening, man? My like button is acting up. Can you guys check to see if yours is working? Well done. Well played, sir. Well played. Miller Mountain says, Rob's got the alpha. Like and subscribe. Absolutely. Can I get an amen to that too? Guys, we are kicking things off with a bang. Let's get going here. Let's see what's in the news this evening. I know you guys seem to prefer the evening live streams, so we have made them a regular thing again. So let's get it, man. Let's get it. Isaac says, looking for an entry point on Ondo. Any thoughts? Man, honestly, Ondo's not a bad price right now, but it is going to go lower along with everything else. What are we at right now? 26 cents. I mean, 18 to 20 cents. Maybe it goes down to, maybe something like that. That's where I would become aggressive. So, yeah. All right. Let's get into it here. What's happening today? What is happening? Let's jump right into a little clippy clip from Crypto Chrome. A little bit of HBAR update. If you know me, guys, if you're in our VIP community, you know HBAR is a project I am very big on. Check it out.
This changes crypto more than price ever will. HBR explained. But what is cryptocurrency actually becoming? Because crypto isn't just trading tokens anymore. It's starting to tokenize real-world assets, stocks, bonds, funds, and bring them on-chain. Right now, Ethereum leads this shift. Most tokenized real-world value already lives there. It has liquidity, developer tooling, and institutional integrations that make it the default settlement layer. But Hedera is positioning differently. It isn't chasing DeFi dominance. It's optimizing for enterprise-grade performance, predictable fees, fast finality, governance structured for regulated environments. Then there's Ondo, actively packaging real-world financial products into tokenized formats and distributing them across networks. It's not theoretical, it's operational. So this isn't just about price, it's about infrastructure. If trillions in real-world assets move on-chain, the network that combines compliance, speed, and scalability doesn't just gain users, it becomes the financial plumbing. And that's the transformation happening beneath the surface. When real-world assets go mainstream, is Ethereum already too far ahead, or is Hedera built better for institutions?
Guys, that's why I talk about this. Myself, Rue, Max, we talk HBAR, Quant, XRP, XLM, ZBEC, right? All of these projects, guys, are laying the rails, right? I'm telling you, man. I'm telling you, man. Okay? Ondo, Piff, so many more. Jay Dorn dropping the cheddar. ZRO had a good run today. Can't wait for Bitcoin's downside. Yes, I agree. I'm actually surprised. If Bitcoin hadn't had that run up today, I was expecting ZRO to actually move to the downside a little bit. Not much, but a little bit. But the tariff news kind of pumped Bitcoin, so it kind of pumped some of the altcoins. So Earth prospecting, 5,000, 5K on HBAR or XRP. Thoughts? Thanks, Rob. Personally, in terms of best ROI per cycle, I'd probably go with HBAR, just in terms of ROI potential. HBAR explained, silly robot. You mean HBAR? Yeah. Yeah, I caught that too. Silly rabbit. All right, what else do we have going on out there? Oh, yes. A lot of controversy right now and questions about this chart here, guys. Everybody's talking about it. The last time this happened, Bitcoin's monthly returns. So we saw here can you see my cursor? Okay, so 1, 2, 3, 4, 5, 6 red months in a row. That was August of 2018 until January of 2019. Immediately after that, we saw 1, 2, 3, 4, 5 green months in a row from February until June. What does this mean? Nothing. It doesn't mean anything. It's just a frame of reference. It doesn't necessarily mean that the exact same thing is going to play out. Are we due? Does it imply that we are due for a couple of green months? Of course we are, right? Of course we are. I mean, we've been red for 5 months in a row now, right? And February is not done yet. So, I mean, do we get a red March, which would be 6 red months in a row, followed by 1, 2, 3, 4, 5, April to August, green summer? Probably not. Do you want to know why? Do you want to know why? Because usually in the summertime, crypto has a lull, right? Usually we don't see massive pumps in the summer, right? That's why they say sell in May, walk away. Everybody leaves. Everybody goes on holidays. Everyone goes on vacations. Usually summertime, kind of a lull. We see a little bit of a dump in the spring and then a bit of sideways action through the summer. So do I expect a massive run up from April to August? I don't. I really don't. I expect consolidation along that time frame. So, Rob, she's hot. Deep dive, brother. Yeah, I was really trying to find some time today to do that for you, brother. I was like, man, I'd like to get that done for Ben today. But I just didn't. I had like 11 one-on-one coaching calls to do, so I just couldn't get the time in. Maybe I can do it tomorrow. I'll see what I can do for you, brother. What's up, big boss? Jack Sparrow. Do we get an invite to the pool in the no diving in the shallow end, though. No diving in the shallow end. Aaron says, hot green summer 2026, baby. Woohoo! Let's go, baby. Let's go. So what else do we have? Oh, yes. Check this out, guys. Little bullish momentum for you. Tim Draper. Now, why do we talk about Tim Draper? What is he associated with? That's right. Swift Coin. If you know Rule Black and Maximus Crypto, you know all the connections from Tim Draper through Swift Coin. He is an investor. Check this out. He says, billionaire Tim Draper on Bitcoin. I think it's the greatest thing that's happened to humanity.
Well, I think we're running through this cyclicality that comes with the halvings, or what they used to be called the halvenings. And I think we're going to see a time here where people are, start to lose hope and all that. And then people will realize, it's a better store of value. It's a better currency. It's a currency that you can trust no matter what happens with your government. Bitcoin keeps perfect records. It's transparent. It's open. Everybody can see it. So it's honest. And I think, and it brings humanity to a higher level. And I think we're going to see, I think it might drop a little more as as people have to unravel because they were a little too enthusiastic and they borrowed to buy more Bitcoin.
Right.
I think those have to be unraveled, and then it'll resume its upward trend.
Well, Tim,
so I'm very excited about it. I think it's the greatest thing that's happened to humanity. Yeah. It's so great that we now have another way for us to all do business.
The best thing,
and it's like as big a deal as going from nothing to shells, or from shells to gold, or from gold to the promise of gold. Each of those made the world wealthier. This is going to make the world wealthier.
Well, Tim, it's interesting to hear some of your...
There is a gravitational pull toward Bitcoin, away from the other cryptocurrencies, and they become more and more marginalized each time there's a boom and a bust. And so I suspect that'll continue. Bitcoin will maybe end up being an 80% market share of all the cryptocurrencies. I think that's probably the way it's going to go.
Well,
I don't agree with that part. Tim. Come on, Tim. All right, why do we like Tim so much here on the channel, guys? Because he holds our favorite little Swift coin, right? That's right. What are we looking at with Swift coin? Bouncing off support very, very nicely, by the way. Check that out. Support, fell below, got back right back above it within 2 days, and we are holding support once again. Do we have a little bit of a double bottom play out? Do we make our way back up to around 2046 to 2048 on Swift coin? Probably. Let's keep going, though, guys. We gotta keep going. Michael Saylor. What are you up to today, Michael Saylor? Let's have a looky-loo. All right, Big Bull. Michael Saylor may be forced to sell Bitcoin. Cryptocurrency analytics company Arkham argued that major Bitcoin bull Michael Saylor might be forced to sell Bitcoin in some situations. Cryptocurrency analysis, and I already read that part. According to the analysis, Saylor is currently losing more than 10% compared to the average purchase cost, but the real question is whether this loss will force strategy to sell Bitcoin. This is something I've often speculated about a couple times on Blockchain Buzz. Will Strategy and Michael Saylor be forced to dump some of their Bitcoin when the shareholders see that they are in the red on Bitcoin? Interesting question. Looking at the company's balance sheet, Strategy's two main financing instruments for generating cash stand out: preferred shares and convertible bonds. Strategy is approximately $2.55 billion in cash reserves to meet these obligations. The preferred shares include issues with the ticker symbols STRK, STRF, STRD, STRC, and STRE. These shares generally offer a dividend yield of 8 to 10%. However, these payments are not legally mandatory. The company can choose not to pay dividends if it experiences a cash crunch, and therefore does not have to sell Bitcoin. Furthermore, share buyback decisions are entirely at the discretion of the company's management. The main binding obligation lies in the convertible bonds. Strategy reportedly has approximately $8 billion in debt in this category. These bonds must either be repaid on maturity or converted into shares at the specified price. The company's current $2.5 billion in cash is theoretically insufficient to cover the entire debt. However, this does not automatically indicate a Bitcoin sale. According to Arkham Analysis, the first scenario is that bondholders exercise their conversion right. If Strategy shares trade above the conversion price on maturity, investors choose to convert their bonds into shares. Indeed, this mechanism was already in place for the 2027 bonds. If the share price falls below the conversion level, the company may resort to refinancing. Options such as selling new shares, issuing new convertible bonds, or issuing additional preferred shares are on the table. However, if these options fail, Strategy may consider selling a portion of the Bitcoin portfolio to finance bond repayments. At this point, the determining factor will be the Bitcoin price and the company's ability to raise funds from the market. Therefore, the risk appetite to be directly linked to Saylor's financing flexibility rather than its average cost. Arkham also points to an important detail. Saylor's past practice of selling common stock to buy Bitcoin doesn't create a mandatory cash outflow for Strategy in the future. Therefore, the statement Saylor is losing money doesn't mean the company will have to sell Bitcoin. Saylor could remain below its average cost for a long time. The critical threshold remains Strategy's ability to roll over its convertible bonds. Now, for me personally, guys, Michael Saylor's biggest mistake is thinking that there was never going to be another bear market for Bitcoin. That was one of the biggest mistakes I could see anybody making. The whole "this time is different" fiasco, right? It got me, it got a lot of people, but it never got as many, or it never hit anybody as hard as it hit Michael Saylor. He was so confident that Bitcoin was never going to see another bear market. And the whole time I was saying, this guy is stupid. Think course it's going to see a bear market, right? And here we are in a bear market. Staking my ZBIC forever. There you go, Carlos. I dig it. And hey, don't think you could slide that picture of Charizard past me, brother. Don't even think about it, man. I dig it. He was probably trying to encourage people to buy and drive the price higher. So yeah, you're probably right. He's trying to create that parabolic FOMO phase, right? You're probably right. I'm picking up what you're putting down. Okay, what else do we have? Let's get into this article here. Okay, so tokenized real estate gains as Dubai opens secondary market. Now, guys, we have talked about projects like Proppy quite a bit in the past, and we did talk about how going into this cycle, how tokenized real estate was going to be a much, much bigger deal moving forward, and here we are. Let's get into it. So, tokenized real estate is moving from concept to practice. with Dubai launching a policy-led pilot and the Maldives advancing a single asset token tied to the development loan. The common thread is a drive to combine fractional ownership with clearer governance, while acknowledging that liquidity and exit mechanisms remain the hard part. In Dubai, the initiative is framed as an ecosystem effort to streamline how property interests are digitized and transacted under public sector oversight. In the Maldives, the structure centers on issuance via a digital securities platform seeking institution-grade controls for onboarding and reporting while limiting primary participation to qualified investors. Yes, there's the catch, the qualified investors, right? Across both the near-term investor impact the near-term investor impact hinges less on technology and more on regulatory guardrails, KYC and AML controls, and what secondary venues may be available. Tokenization can improve divisibility and transparency, but it does not on its own guarantee ready buyers or instant trading. This is a sector, however, I am very interested in getting into, and I will be talking a lot more about it over in our Patreon community through this cycle. Dubai's land department is piloting tokenization with the market outlook that, if realized, would shift a meaningful share of the city's property flow into digital form. According to Dubai Land Department, tokenized real estate could reach roughly 7% of transactions by 2033. About AED 60 billion equals 16 billion US, with the program intended to simplify buying, selling, and investment processes under official oversight. While Dubai pursues a policy-driven framework, the Maldives is showcasing a project-level approach focusing on issuance mechanisms and investor eligibility. According to Finance Feeds, World Liberty Financial selected Securitize to handle tokens tied to the development of loans for a Maldives resort, with Dar Global involved on the development side. An argument that points to debt-style tokens. We've talked about this just the other day, guys. We have videos coming out over on the Coin Vault, me, Max, and Rue, explicitly breaking down World Liberty Financial and Securitize attachments to a lot of these other guardrail companies, a lot of these finance rail companies, Zebek, Canton, Quant, and so many more. So this is the future, guys. This is the future. You're looking at it. And I am going to be diving deeper and deeper into this in this cycle, because if I can start buying up tokenized real estate, you can bet your bottom dollar I'm going to do it. Can I get a hell yeah on that? Let's get over to Squawk Box. We got more to get into. Okay, so tariffs create more economic pain than long-term benefits. Ooh, strong word.
Now, Tony Roth, Chief Investment Officer at Wilmington Trust Advisors. It's good to see you this morning, Tony.
Good morning, Joe.
We got. Let's just talk about some of the numbers coming out today. We can talk macro a little bit. We got conflicting signals on a trade deficit. Is it improving? I heard it was a great quarter, but then again, last year didn't really improve that much. Do you care?
Yeah, we care ultimately because a smaller trade deficit would be better for the dollar, and it would be contrary to the debasement trade. But we don't think that the tariffs are ultimately helping the trade deficit. We just don't see the reshoring that this administration is trying to accomplish. So ultimately, the tariffs are creating a lot more economic pain than potential for long-term benefit, other than the fact that it gives the president negotiating power. And there are some trade deals that have come out of the situation that could be good if they ever get finalized. But so far, the tariffs are really not having an impact on that deficit, which would be good to drive it lower.
Yeah, and do you think the dollar at this point deserved to weaken a little over the last year from what was a pretty high valuation, I guess, historically, or is it something to really be concerned with? And did the administration kind of look the other way because of the possible advantages to exports?
Yeah, without question, the administration is looking for a lower currency, despite what they may say. They're making very little effort to talk it up at this point. And I think that the currency is at a good level right now. It certainly helps our big multinational exporters. And the rate picture in the U.S. justifies a weaker currency, particularly as we see, we believe, a disinflationary trend. And we think that the Fed is going to continue to cut faster than consensus, probably 3 times this year as inflation wanes. And we've got a real problem in the labor market, and we have a real problem with the lower end consumer. So GDP is going to come in. We talked to Joe about that data later today. We're also going to get GDP for the fourth quarter. For the third quarter, it was around 4.5% or so. We're expecting the fourth quarter to come in at around 2.5%, and the first quarter of 2026 could slow all the way to 1%. So all of that suggests lower rates in the U.S. and a weaker currency.
Yeah, and those are I don't know if those are consensus views. We're told that that nominal GDP could be, I mean, numbers that we haven't seen in quite a while, according to the administration. You're worried about the low-end consumer too, and we talk K-shaped economies, and it's something we've been talking about on the show quite a bit this week, that the regressive nature of tariffs. And it goes back and forth. The administration, Jamison Greer, argues that that consumption is skewed to the high-end consumer, and that a lot of consumption you don't see in the bottom 30%, but that's where any increases are a much bigger percentage for those low-income consumers.
Well, that's right. The high-end consumers consume a lot more than the low end, but the low end is still a very important component of the economy. And so when you look, for example, at earnings and what's happening in the stock market can't break through 7,000, even though we've had really a phenomenal earnings season by all accounts. On a nominal basis, earnings are growing at 10%, profits at 13%, and almost all sectors are guiding above estimates. But where are we seeing weakness in the guides? It's from all the consumer companies, both discretionary and staples. And the reason is that lower end consumer, which is still very relevant, is suffering from an affordability problem. And even though we see inflation coming in at target by the end of the year, that does not address the aggregate increase in prices that we've realized over time.
Yeah,
and so that, in conjunction with the weak labor market, is just very concerning. And that's why we expect growth to slow to almost 1% in the first half of the year.
Right, and tough to get through 7,000. But yeah, you go from 3% or 2.9 on inflation. Let's say you get down to 2% or 2.2. You're still adding it on top of 21.5%.
That's right.
The prices have risen in recent years, and that makes it tough. So you might have a little bit different viewpoint. So the labor market slows because of maybe the low end and the low end consumer slows, and that brings growth down. But that could cause some easing from the Fed. They come to the rescue again. So the market, either way, could end up higher.
Well, there's some tailwinds for the market. So we're not forecasting a recession. We're forecasting slower growth with a reacceleration towards the end of the year and into next year. So what's going to cause the reacceleration? Well, first of all, you have, and most importantly, you have the productivity come from AI, which is pretty awesome. Right now, productivity is around 2.5%, just because companies are squeezing their employers, not even using AI necessarily. And this is the year that wave of AI that's been crisscrossing the ocean is really hitting the shore. And so you're going to see big productivity increases from AI. You're going to see lower rates, at least in the front end of the curve, maybe not further out on the curve. And then you're also going to see some other impacts potentially around tax refunds being higher. And then most interestingly, and I don't know if the Supreme Court case is coming out today or not, but this administration, I think, needs to be very, very careful and thoughtful around whether they use the potential Supreme Court case as an off-ramp on these tariffs, because these tariffs are just a tax on that consumer, which is struggling so badly. And if they use it as an off-ramp, they could really help this economy out.
And I was muted. I said he's got some points. I could see it. Rightly divided. We in this live are going to be the winners in this cycle. Can I get an amen, guys? Listen, whether you like it or not, I'm going to tell you exactly where the top is in this cycle we've just started. And some people are going to get mad at me when the time comes for telling them to sell. Some people are going to sell. Some people are not going to listen. But we are getting out at the top of this cycle. Book it, clip it. Like Max says, boil it, mash it, stick it in a stew. Rob, how many halvings before you think Bitcoin will hit 500? I don't think it's going to hit $500,000 this cycle, 2029, maybe 2033. I could see it hitting 500,000 by 2033. I think it's going to top at about 250, 275 in this cycle, roughly, right? We topped at 126, maybe 250, 275 next cycle. Maybe we get close to 500 after that. So absolutely. Absolutely. Okay, what else do we have? USDC supply expands after 250 million treasury mint on Solana. Guys, do not sleep on Solana this cycle. Based on data from Solana blockchain, $250 million in USDC Circle was minted in the USDC Treasury on Solana. The transaction reflects a Treasury mint on the network rather than a transfer between private wallets. So money coming into the Solana ecosystem here, guys. Not just, it's coming from on-ramps, not just being, moved around. Treasury mints often precede liquidity deployment and may not immediately expand circulating supply. Timing depends on customer issuance and redemption flows and internal treasury operations. Carlos says, do you think we can climb earlier than anticipated or still going? I'm not letting go of the 4-year cycle this time, man. I'm not letting go of it this time. Too many times people said in this last cycle, I fell for it too, that this time was different, and it turns out it wasn't different. Bitcoin topped exactly when it was supposed to top, and I am sticking to my guns on that this time around. I'm telling you, September to November of 2029, I am out of this market. I will be selling everything, and if it goes higher, I don't care because I'm buying the bottom right now anyway, so it's a win-win, right? But if I time it and we do top and we go down again, just like we did this time, and at that time, everyone will be saying this time is different. We'll see. Michael Gulpy, what's up, buddy? Good to see you, my friend. Good to see you. Thanks again for coming in, guys. Make sure you go give Michael a follow over on his YouTube channel. He was a recent guest on the last episode of Blockchain Buzz. Make sure you check him out there, guys. Fantastic guy, fantastic guest. I hope to see him on Blockchain Buzz again very, very soon. Derek says, what's up, Brother Rob? Can you pull up the Litecoin chart? Do you think a break is coming up? A lot of stuff depends on Bitcoin, but give me a few minutes to finish this article, and then I will go look at the Litecoin chart for you, my friend. So why it matters, USDC on Solana liquidity and market effects. Additional USDC on Solana can lift on-chain dollar liquidity for trading venues, DeFi pools, and payments, potentially lowering slippage during volatile periods. Effects vary, and how quickly the newly minted tokens are distributed. Large mints are commonly interpreted as preparation for exchange operations, DeFi market making, or institutional settlements, but on-chain intent is not certain. So usually, guys, when you see large amounts of stablecoin, whether it's USDC or USDT, minted from on-ramps, it's usually a pretty strong indication that someone's about to buy a lot of crypto, right? Whether it's Bitcoin, Solana, altcoins, whatever, right? Because why else do you on-ramp to stablecoin? To buy crypto, usually, right? So, yeah. No problem, brother. I got you, man. I got you. Carlos says, I DCA'd into Bitcoin every paycheck thinking long-term. There you go, man. There you go. That's how babies are made, my friend. That's what they taught me in school anyways. Let's keep going. What else do we have? We got a Bitcoin article to get through here. Check this out one time. Bitcoin holders after 10% global tariff Supreme Court ruling. So what Trump's 10% global tariff means after the ruling. So Trump, this guy has got cojones, okay? This guy gets the court rules against his tariffs, and he goes on television and says, I'm doubling down. I'm adding another 10%. You got to love the gumshoe of this guy, the gumption, right? Absolutely fantastic. Fantastic. If you don't laugh, you'll cry, right, guys? Donald Trump says he will impose a 10% global tariff on top of existing duties and argued interest rates should be significantly reduced, as reported by Politico. The announcement followed a Supreme Court decision that struck down many of his earlier tariffs. The court found he lacked authority to enact sweeping tariffs under law intended for national emergencies, according to Al Jazeera. In response, Trump signaled he would proceed via a new executive order to reconfigure the tariff regime. You love it. So why the Supreme Court decision matters for tariffs. The ruling is a major setback and raises questions about the durability of U.S. trade actions going forward. As reported by the New York Times, broad all-country tariffs now face higher legal hurdles, and future measures will likely be tested quickly in court. So this may hinder the U.S.'s ability to apply tariffs in the future. Could be bad, right? Legal commentary underscores the vulnerability of a blanket 10% levy. The proposed 10% global tariff is likely to be struck down quickly. Law professor says a law professor at Kentucky University. So the immediate impacts on price, trade, and interest rates. The broad import tax generally raises consumer prices by lifting the landed cost of goods and inputs. The International Monetary Fund warned that sweeping U.S. tariffs could slow global growth to about 2.8% and worsen inflation. JP Morgan economists estimated recession risks could rise significantly, up to 60% roughly, if wide tariffs disrupt supply chains and provoke retaliation. The firm also flagged weaker business sentiment as a transmission channel to slower growth. For households, the Tax Policy Center projected that a 10% global tariff layered with targeted duties would reduce average after-tax incomes by about $1,800 in 2025. The burden would be felt both directly at retail and indirectly via higher business costs. Tariff-driven price pressures, say that 3 times fast, would complicate monetary policy. The risk of conflict between Trump and the Fed is very high. As reported by Market Watch, the Federal Reserve's independence and mandate to restore price stability suggests cuts are not guaranteed if inflation reaccelerates. That's funny because we've been watching inflation trickle downwards. In fact, our last inflation report a few days ago was actually that inflation was dropping again, and yet we're still not getting rate cuts. So what changed after the Supreme Court struck down the prior tariffs? The decision narrowed the use of emergency-style powers for trade actions. As a result, any new global tariff move would need a different legal basis, tighter tailoring, and will likely face rapid injunction requests. Courts are now primed to scrutinize broad import levies for statutory fit and procedural rigor. That increase the probability of partial stays, narrower relief, or remand for agency reconsiderations. So it's basically going to be a lot harder for the government to impose tariffs in the future. Another 4-year cycle would be good anyway. Time to build our bags. Can I get an amen, my friend? Can I get an amen to that? I am building a portfolio, my portfolio, transparently over in our Patreon community right now, guys. We're going to build that portfolio up over the course of this cycle to minimum $1 million. If you want to follow along, you got to be part of our community, guys. Plus, I'm dropping gems like Tic Tacs, baby. Check it out for yourself. The link's in the chat. It's in the pinned comments. It's in the description. It's everywhere you want to be. overcome. What's happening, man? So there it is. There you have it, guys. And just remember, as I always say, every time you hear that the Bitcoin and crypto market is dead, if you had put $100 into Bitcoin every single time it had been declared dead, you would have $70,992,610 right now. So does that sound like it's dead to you? Probably not. Put some stank on it. We got a $68,000 Bitcoin, guys, continuing to try to climb its way to the moon, probably to the top of the range on this bear pennant. Boom, let's reject off of there. Do we have enough on this double bottom to break up to 70,620? And can we get through there on a daily candle close? All this and more next time on Power Rangers. All right, guys, I got to get out of here. Make sure you hit the like. Make sure you hit the subscribe. It's Open Mic Friday night on the Patreon. Check out our trade channel. We have been knocking it out of the park over there as well. We're dropping gems. Book your coaching calls, one-on-ones or group coaching calls. Get all the answers to the questions you have, and I'll even answer some questions you don't have. Check it out. Again, the link's down below. I'll see you guys in the next one. God bless.